Gold has been generally sliding down all the way since early May. Have we seen the low last week with the FOMC? Well, that is a possibility, and in the intermediate term I am bullish on gold, although in the short term there might still be some pain. Zooming out a little bit, notice that all through March and April gold has been rising from around $1,800 all the way to over $2,000, and before that the previous intermediate cycle decline was relatively mild, again with gold rallying all through November, December and January. So the sentiment on the market is still far from depressed. We'll have a look at the optics in a minute. But what it tells you is that there is still a likelihood of another swoosh down to bring the market into that depression, which does usually provide an attractive buying opportunity. So before going into details, I want to first have a look at the US dollar. US dollar has been in this daily cycle for around a couple of months, and potentially on the 16th of June we've seen the end of this daily cycle, implying a cycle lasting for 63 days, and the usual duration for these daily cycles on the US dollar is a couple of months. So we are pretty close to an average duration here, meaning that the likelihood is pretty good. We've seen the cycle low on dollar. But the intermediate cycle is pretty old already, and we are pretty close to an intermediate cycle decline. So what I see developing on the dollar is maybe one more bounce into the third daily cycle of this ongoing intermediate cycle, which started over here in early February. Perhaps only a modest bounce into that third daily cycle before dollar drops down into the intermediate cycle low, very likely testing or maybe even breaking below this support around 100.8. And zooming out a little bit on the US dollar, what we might see over the next few weeks is maybe a formation of this descending triangle on the US dollar, and statistically descending triangles usually break on the downside, which aligns well with our view of the cycles, especially the intermediate cycle, which is likely to create a lower low. So sometime in the intermediate term, over the next several weeks, as the dollar is declining down into that intermediate cycle low, that will be helpful for a rally in gold price. So as I mentioned, in the intermediate term I'm bullish, although in the short term, as dollar is likely to bounce into this daily cycle, that might provide some pressure on gold price in the meantime. And even over the last 2 to 3 weeks, as dollar has been declining down into this short-term daily cycle low, that's all the way since the end of May, gold hasn't really been doing that well. We see that since the end of May, gold also has been generally sideways to down, which also supports my expectation of perhaps one more push down in gold before we see a bit of a rally. Whether that's going to be a rally into a third short-term daily cycle, followed by the intermediate cycle decline, or whether we're going to create a relatively short intermediate cycle lasting over here from end May, implying that the next rally is going to be our intermediate cycle rally, that still remains to be seen. There is a pretty good chance for a short intermediate cycle that would give us a couple of relatively short intermediate cycles since late last year. That's because the intermediate cycle during 2022 was extremely long. And as I mentioned in a lot of my previous videos, usually the length of these cycles also oscillates to bring the duration back towards that average duration, which is around half a year for these gold cycles. Of course, nobody knows the future, and gold might just shoot up from here to new all-time highs, but I don't think it's extremely likely. So two of the more likely scenarios is a bit of a short-term decline followed by a rally either into a new intermediate cycle, that's one of the scenarios, or short-term rally into a third daily cycle, that's second likely scenario, followed by another dip lower before that intermediate cycle rally actually takes place, and we are finally likely gonna break to new all-time highs, breaking above this triple top right now, somewhere around 2080, 2070. After all, if you zoom back and look at some of the most recent price action, there is a bit of a support that's being formed anywhere around 1930 to 1940 that has been respected several times since early March. We've seen this support tested 2 or 3 times over the last month, and the more often you test the area, the weaker it becomes. That's just one more sign that we might actually see gold give us one more push lower before that eventual rally to new all-time highs. That new all-time high on gold though is quite likely to be created in this next intermediate cycle rally. Miners are already showing positive divergence over here with a higher high in mid-June versus late May. This is GDX. Looking at silver, silver is also showing a positive divergence again with a higher high in mid-June versus late May. All of that is hinting that the cycle low in gold is perhaps approaching relatively soon. But I still expect at least a bit of a breakdown below that support zone around 1930 on gold price. After all, the market sentiment is still pretty high, far from depressed levels. Looking at this optics on gold, it's been above 50 all through this intermediate cycle decline. Usually these intermediate cycle lows take place with the optimism index at least below 50, more commonly closer to 40 or even lower than that. So again, perhaps a little bit more short-term pain in gold before a new intermediate cycle rally. Seasonality also agrees with that. Again, a dip down into mid-July is quite common. Looking at seasonality since 2015, since the end of that previous bear market, followed by a usual rally in gold into late summer, early autumn. And beyond that, if you look at a bit of a longer term chart, you might see a bit of a cup and handle formation all through since early 2022. The depth of this cup is around $400 or so. So a measured target following a breakout from this intermediate cycle decline, wherever the breakout is going to take place over the next several weeks, say a breakout from around 1980, would project a measured move to $2,400 over the next several intermediate cycles. Wouldn't that be nice? And that's just gold itself. What would happen to miners which have been depressed over the last many months? And beyond those major miners, together with the members at myfinanceteacher.org, we like to go on a quest for some of the most attractive juniors that might provide that additional torque for your portfolio once we finally see gold breaking to new all-time highs. So for more details on a range of assets, particularly on some of these gems among junior miners, join us at myfinanceteacher.org. For now though, have a productive Monday. Bye bye.